Michael Burry's last dark warning about China's evil plan. Michael Burry, made famous by 2015 film The Big Short for making $100 million shorting the American housing market ahead of the 2008 financial crash, has declared his unsurprising position on China Evergrande. Today we're going to talk all about Michael Burry's last warning about China's evil plan. So watch the video till the end, because today's video is going to be the bomb. Welcome to Michael Burry Secrets, your daily dose of Michael Burry. If you're interested in everything around Burry, this is the place for you. Subscribe if you want to stay updated with all the Michael Burry secrets, predictions, and stay one step ahead in the financial world. Watch the video till the end, and make sure to hit the like button if you want to be a millionaire within the next 3 years. Don't forget to enable all notifications to join our weekly cash giveaway pinned in the comments. Now let's get to our topic. On Twitter, Burry endorsed a financial analyst who claimed that the Chinese markets are becoming a car crash of which the rest of the world could be a victim too. Note the date, Burry tweeted, enclosing a tweet from the 20th of July 2021. This is why, if you want to be informed or be cool, you should read every thread on #Evergrande/China/Contagion the last few months by @TheLastBearSTA1. In the enclosed Twitter thread, the unnamed analyst explained how the biggest risk to equities is contagion in the Chinese markets. The parallels to US in September 2008 are striking. Critical policy decision relating to saving a failing bank with bad assets over-levered on a property bubble. Unless Beijing steps in with a strong statement to support these firms, the risk of contagion is very real, the analyst warned. Burry's tweet instantly drew attention from Wall Street Bet's Reddit thread. A post simply titled "Michael Burry confirms China collapse incoming $12 trillion" has been upvoted 1.8 thousand times in just 2 days. The largest Ponzi scheme in human history is about to fold. A $12 trillion credit market based on empty, dilapidated apartment buildings. We all knew this was coming, and if you don't know, well, now you know. The post reads. 870 comments were left on the post, with the majority praising Burry's insight. Burry has since deleted all of his tweets. With over $300 billion of debt on its books, investors have been expecting Evergrande to declare bankruptcy at any day now. Efforts by Evergrande themselves to shun rumors regarding their bankruptcy were only met with increased speculation that the company will collapse. Even the Wall Street Bets community has been weighing in about the future of the troubled Chinese firm. Last week, legions of angered investors stormed Evergrande's headquarters in Shenzhen, demanding the company repay their dues. Meanwhile, on Reddit, a video of billionaire Guo Wengui predicting China Evergrande's collapse from 2017 has been circulating. Evergrande has since extended an olive branch to disgruntled investors, offering them discounted property in lieu of the debt owed. The world is still waiting to find out what will happen to troubled Chinese conglomerate Evergrande and its enormous mountain of debt. The property developer's debt crisis is a major test for Beijing. Some analysts fear it could even turn into China's Lehman Brothers moment, sending shockwaves across the world's second biggest economy. Real estate and related industries account for as much as 30% of Chinese GDP. Last week, investors experienced whiplash as the firm met one crucial debt deadline, but then failed to address another. Shares shot up one day and down the next. The coming days and weeks will be critical. So far, Evergrande has failed to publicly address 2 interest payments on bonds over the past week. That's fueling speculation over what could happen next, with potential outcomes including a Beijing-backed bailout, restructuring, or default. Here's what you need to know about Evergrande and how it got to where it is now. Evergrande is one of China's largest real estate developers. The company is part of the Global 500, meaning that it's also one of the world's biggest businesses by revenue. Listed in Hong Kong and based in the southern Chinese city of Shenzhen, it employs about 200,000 people. It also indirectly helps sustain more than 3.8 million jobs each year. The group was founded by Chinese billionaire Zhu Zhaoyan, also known as Hu Kaiyan in Cantonese, who was once the country's richest man. Evergrande made its name in residential property. It boasts that it owns more than 1,300 projects in more than 280 cities across China, but its interests extend far beyond that. Outside housing, the group has invested in electric vehicles, sports, and theme parks. It even owns a food and beverage business, selling bottled water, groceries, dairy products, and other goods across China. In 2010, the company bought a soccer team, which is now known as Guangzhou Evergrande. That team has since built what is believed to be the world's biggest soccer school at a cost of $185 million to Evergrande. Guangzhou Evergrande continues to reach for new records. It's currently working on creating the world's biggest soccer stadium, assuming that construction is completed next year as expected. The $1.7 billion site is shaped as a giant lotus flower, and will eventually be able to seat 100,000 spectators. Evergrande also caters to tourists through its theme park division, Evergrande Fairyland. Its claim to fame is a massive undertaking called Ocean Flower Island in Hainan, the tropical province in China commonly referred to as the Chinese Hawaii. The project includes an artificial island with malls, museums, and amusement parks. According to the group's most recent annual report, it started taking customers on a trial basis earlier this year, with plans for a full opening at the end of 2021. In recent years, Evergrande's debts ballooned as it borrowed to finance its various pursuits. The group has gained infamy for becoming China's most indebted developer, with more than $300 billion worth of liabilities. Over the last few weeks, it's warned investors of cash flow issues, saying that it could default if it's unable to raise money quickly. That warning was underscored this month when Evergrande disclosed in a stock exchange filing that it was having trouble finding buyers for some of its assets. In some ways, the company's aggressive ambitions are what landed it in hot water, according to experts. The group stayed far from its core business, which is part of how it got into this mess, said Maddie Beckink, China director of the Economist Intelligence Unit. Goldman Sachs analysts say the company's structure has also made it difficult to ascertain a more precise picture of its recovery. In a recent note, they pointed to the complexity of Evergrande Group and the lack of sufficient information on the company's assets and liabilities. But the group's struggles are also emblematic of underlying risks in China. The story of Evergrande is the story of the deep and structural challenges to China's economy related to debt, said Beckink. The issue isn't entirely new. Last year, a slew of Chinese state-owned companies defaulted on their loans, raising fears about China's reliance on debt-fueled investments to support growth. And in 2018, billionaire Wang Jianlian was forced to downsize his conglomerate, Dalian Wanda, as Beijing clamped down on firms borrowing heavily to push overseas. Evergrande also caters to tourists through its theme park division, Evergrande Fairyland. Its claim to fame is a massive undertaking called Ocean Flower Island in Hainan, the tropical province in China commonly referred to as the Chinese Hawaii. The project includes an artificial island with malls, museums, and amusement parks. According to the group's most recent annual report, it started taking customers on a trial basis earlier this year, with plans for a full opening at the end of 2021. In recent years, Evergrande's debts ballooned as it's borrowed to finance its various pursuits. The group has gained infamy for becoming China's most indebted developer, with more than $300 billion worth of liabilities. Over the last few weeks, it's warned investors of cash flow issues, saying that it could default if it's unable to raise money quickly. That warning was underscored this month when Evergrande disclosed in a stock exchange filing that it was having trouble finding buyers for some of its assets. In some ways, the company's aggressive ambitions are what landed it in hot water, according to experts. The group strayed far from its core business, which is part of how it got into this mess, said Maddie Beckink, China director of the Economist Intelligence Unit. Well, that's it for today's video, guys. Also, we would like to mention that this is not a channel intended specifically to provide financial advice, and we do not ask you to invest in any company. This is merely a channel directed towards bringing educational content to your doorsteps. With that in mind, before you invest in anything, we recommend you do thorough, wide-spectrum research on the topic. And make sure to subscribe and give us a thumbs up. See you next time on Michael Burry Secrets. Bye!